the US dollar is at a critical point. Yesterday's CPI still confirmed that the dollar is weakening. Today's PPI could either confirm the move to the upside or change the direction of the market completely today. The question isn't whether the PPI will move the market. The question is, are you already positioned before everybody else reacts with the PPI today? Hello traders. In today's analysis, I'll explain why I'm still positioned for pound dollar buy, US dollar cut sell, euro dollar to the upside, and I'm still waiting for positioning myself again on gold to the upside. We'll break down in today's PPI what market is expecting, how I'm preparing my trades before the one of the biggest economic events this week. And again, traders, if you enjoy mixing the fundamentals with the technicals, make sure you like and you subscribe to this channel because that's exactly what we do every week. So without wasting much time, traders, I would like to start with the US dollar, the euro, and the US dollar. So, with that being said, this is how I see it. Firstly, let's just zoom out to see where this dollar weakness comes in and how it has been reacting for the past few days. Now, with that being said, traders, the non-farm payroll weak data that came in weaker, way weaker than expected, it was here. It was supposed to go to the upside with a sharp momentum, but it didn't. The market just waited a long time because we had the holiday in, just kept on waiting, and then we entered yesterday with the short again, a weak PPI. Let me just shorten this pane. Okay, we came in here with the weak PPI and the momentum to the upside came. Now, what do I want to see or what do I expect to see? I expect the PPI to follow suit with the weak direction of the dollar. And with that comes what? With that comes buying opportunities from this area to the upside to continue again with the buying pressure. Now, one thing that has to be said is that the euro dollar continues telling exactly the same story. The dollar has been losing momentum over a week now, from a weaker employment data to weaker CPI. The market has been building a bearish narrative. Today's PPI either confirms the story or temporarily changes the narrative. Now, by temporarily changing the narrative, what could happen? This simply means that it could come down, retest this level, and then continue to the upside. Now, as long as the dollar weakness remains the dominant theme, I still favor higher prices on the euro and the dollar. And the second pair that I would like for us to look at is the pound and the dollar. So very simply put, this week or this month rather, we did have a weaker non-farm payroll from here. Didn't break so much as breaking new highs also, but it kept a positive outlook on this because we did have a new high from non-farm payroll last week, and this was my buy setup from last week. Even though we did have a deeper pullback with a two wave to the downside, this still didn't change the outlook or this didn't take out our price. In fact, the market just came out closer and gave us, when the PPI came out, everything else was bullish again. And it looks like we might be on a pullback, but potentially we could also go to the upside with today's PPI pressure. Now, this is exactly what to look for in the market currently. If anything comes, if the PPI has stronger than expected reading, the market might potentially come to this level to retest this level, and then continuation to the upside will be imminent. Now, I would like for us to zoom in. This is the PPI today, and this is exactly what it looked like yesterday. We didn't even trade on the PPI because we were already positioned in this pound dollar buy. Now, one thing is for sure, I want to confirm one thing. the pair continues respecting the bullish structure we've been following since the weak NFP. Yesterday's CPI added more pressure on the US dollar, allowing buyers to remain in control. Now all eyes shift to PPI. If inflation, if producer inflation comes in weaker than expected, I believe the pound has room to continue even higher. However, if PPI surprises higher, the expectation might be, as I have told, break this low and maybe take a break even. And then with that break even, what should come opportunities for buying, because at this point we are now just waiting for the market to move. Clearly, most of these economic events, they do not move the same day. Some of them, they might even take 72 hours before they manifest their full strength or what truly happened. That's just the way the market behaves in order to trap uh, small traders. So I do not believe that anything else that might come might potentially cause us to come down to this support level. I don't believe so. I'm still bullish on the dollar to the upside. So with that being said, this is still my original bias. So let's go to the US dollar and the Canadian dollar. So traders, with the US dollar and the Canadian dollar, very simply put, what we do have or what we are expecting to see in this market is that this is just going to continue to the downside, because not only do we have the PPI today, but we do have the interest rate decision of the Canadian dollar, so it might remain the same to the downside, but only if it does get to this, because the Canadian dollar has been hammering the dollar ever since last week's non-farm payroll. So this was Thursday non-farm payroll, this was Friday, and then this was Monday, and ever since then the market has just been making lower lows and lower highs without waiting or without having any shame. So this is exactly what I expect to see going forward. This is one of the biggest trades that we are still in. And remember, we had two positions here. We took profit right here with 1:13. And after taking 1:13 from here, what I expected was, if price have, because not only did the technicals override this one, this is the NFP to the downside. Not only did the technicals override the high of that day, but it put a scare on me that maybe we might reach here and potentially go to the upside. So we took take profit one and let the other one just run. And this other one has been fucking fantastic. So with that being said, traders, the most important thing to remember, especially with the US dollar, Canadian dollar, is that it remains one of my favorite positions. The overall trend continues pointing lower. Canada is expected to keep interest rate unchanged today. So the main driver for this pair remains the strength of the US dollar or the weakness of the US dollar. If PPI confirms yesterday's CPI number, I still expect sellers to remain in control, as you can potentially see. And until the dollar shows genuine strength again, I still prefer selling instead of buying this pair, which is just a continuation to the downside. I don't think we can just buy this based on whatever PPI might be printing today. It is, I'm not saying it is impossible, but I'm saying it's highly unlikely that this might happen. So anything else that happens on the US dollar and the Canadian dollar, I'd still be looking for short opportunities if you're not already here with me. So with that being said, traders, let's go to the last but not least, gold. Lastly, gold. With this, gold has been a bit on a bearish side despite a weak non-farm payroll. This was a strong move to the upside, and ever since then we've been having break evens everywhere with gold. We've had break evens here. We've had break even from yesterday's CPI. So all I know is that I'm not going to sell gold only because gold looks bearish technically. I will only sell gold if everything else favors the selling of gold. So anything else that comes out, I'm not interested in it. I don't follow the fundamentals first. I follow the data first so that everything else that follows makes sense to me. So overall structure, we are still trying to find a buying opportunities from this level, of course, to continue to the upside. It might even reach this 78.6% of Fibonacci retracement and then continue to the upside. Let me just zoom in so that traders can understand what I am talking about when I'm talking about this 78.6. The technical side of this is the 78.6 level that we will focusing on. To the upside, this will look perfect for us. Now, traders, with that being said, gold has reacted exactly as we expected. After every economic news, there is a buying momentum. Even with this NFP, there is another buying meta. Every single time we are with gold, gold always gives us the luxury of reacting to the market as great as we expect it. A weaker dollar generally supports one thing. It supports gold because it becomes cheaper for international buyers. I hope that makes sense to you. So if today's PPI also shows cooling inflation, gold could continue to attract buyers. That means we could continue to the upside. I am waiting for an impulsive bullish engulfing to the upside here so that I can just get into there with proper risk management. But if producer inflation surprises higher, expect gold to see a decrease, and then this might also continue to the downside. So this is exactly what is expected on the market with the current positions that we are holding over these signals that were discussed right now. So traders, what exactly are traders looking for on today's PPI? The producer price index measures inflation before products reach the consumers. Yesterday's CPI suggests inflation is cooling. Today's PPI tells us whether the business are also experiencing lower price pressures. If PPI comes in weaker than expected, it strengthens yesterday's CPI story and increase expectations that the Fed may eventually become less aggressive. That would generally support pound dollar, euro dollar, gold, and putting additional pressure on US dollar and the Canadian dollar. If PPI surprises higher than expected, expect the dollar to recover as traders reassess future interest rate expectations. Now, traders, this is exactly why professionals don't gamble on news. The goal isn't to predict every number perfectly, how it's going to pan out, how it's going to be building out. No, the goal is to build a strong bias from fundamentals, confirm it with the technicals like I did in all four of these, and manage risk before the market moves. That's how consistency is built. That is exactly how consistency is built. I want you to remember that. I'm going to repeat it for the last time. That is exactly how consistency is built. You don't have to predict every number that comes out of the PPI, CPI, or even NFP, but You just have to position yourself and build a bigger trade so that you don't have to necessarily trade each and every single trade, or each and every single day, or even each and every single time there is news. In pound dollar, in US dollar, Canadian dollar, we have never traded ever since last NFP. We've been in here and everything else has been going according to the strategy and according to our plan. We should check it out right now. I believe you guys can. Do you understand? Ever since NFP, this has been. We've had FOMC minutes, we've had initial jobless claims, we've had unemployment rate of the Canadian dollar, we've had the US CPI, even the new Fed testimony, and today we are having the PPI. We are still in it. We've already traded once back then. There is no need for you to always be trying to guess the direction over every number that comes out of the market or of the fundamental uh, events. Now, if you want to trade these kind of opportunities, traders, join my VIP signals for only $30 per month. Inside VIP, remember what you will get. You will get exact entries as me, stop loss and take profit levels, break even management, live trade updates, and daily Forex analysis. Not only one video for the day, but two videos for the day, analyzing the London session and the New York session. So you'll have to find my free Telegram link in the description below. If this analysis helped you, hit the like button, subscribe to the channel, turn on the notification, because today's PPI could create some of the biggest trading opportunities of the week. I'll see you after the news.